Welcome back to the Daily Journal. So we are reviewing Bitcoin's price action on the 1 hour chart. There's a stunning market maker sell model that we're going to apply my model to. So let's get into it. So for anybody who's watched any of my live analysis on Bitcoin or previous daily journals, you know on the weekly I am bearish. We had swept the previous quarterly hub. We had this change in state delivery. We did trade down to the 10th of October liquidity lows, but we have created inducements by stopping just above this monthly fair value gap, which is where I'm looking to get involved in price at the very least. I'd like to see the yearly open to get retested, to see a bounce there. We've got a CME gap down this side, as well as the standard deviation, weekly fair value gap, etc., etc. So let's see how this plays out in time to come. But the point being is that going into this weekly, I am bearish. So dropping down to the daily, let's just rewind the clock to take you through the price action. So going into the start of the week, over the weekend, we had a lot of bullish news about stimulus checks, about government shutdown ending, etc., etc. So going into the week on Sunday and Monday, it was bullish. So as one of my community members had asked me what I think about price, do I think 94 is still going to happen? And my response was yes, because of the analysis I've just given on the weekly. And the way that I see it, as I mentioned to him, we've opened up the week bullish on news, but we're just trading into resistance. And so I'm looking for structure, right? So I've got bias. And so when price on the 1 hour trades into this, I'm looking for a smart money reversal, which confirms a shift from an accumulation side to distribution for a market maker sell model. So I'm anticipating that price will trade into this daily fair value gap, and then I just look for confirmation. In the meantime, what I can do is put my midnight open for New York, and I'll look to the left to see if I can confirm, or rather validate, the accumulation side of a market maker sell model. And two things I have to look for or have to see is liquidity and inefficiency. So let's look at liquidity. First and foremost, we can see that we've got these relative lows at this original consolidation. Secondly, I can see these relative lows here, and we've got all this salsa liquidity here. Secondly, I can see an inefficiency here, as well as here, as well as here. So those are the two things I look for, liquidity and inefficiency. So this confirms to me that there is accumulation going on from the market makers, accumulating what exactly? Well, they're accumulating shorts, they're accumulating sells. As the market buys, who's selling to them? It's the market maker, right? They are the counterparty to every trade in this market. So what I'm looking for is for price to trade into this daily fair value gap to see how price reacts. And only once I have confirmation in the form of a smart money reversal will I look to get on side of the distribution for this market maker sell model. So let's see what price does going into Tuesday. Okay, fantastic. So we've had a sweep of these highs, which are sitting just below the daily fair value gap. So what I want to see now is one of two things. Either we come up to sweep this high, then get a change of state delivery, or just come and drop down. So I'm looking for the swing low that's swept this high. So I mean, you look to this candle here, this is a swing low. And so this is what I would use for my confirmation of a change in state of delivery once price closes below. Now going into the opening of Tuesday, I look left and I can see this change in state of delivery, which confirms that this daily candle, which traded into not just the previous day highs, but also that daily fair value gap, has then closed below to confirm this as a reversal candle. Now what I see is this candle over here is just accumulation. This is manipulation, and now I'm looking for distribution on this day. So there's one or two ways we can approach this. If you are very confident in your bias, you could immediately enter at this point here after your confirmation. Your stop loss can go at the 0.5 of this candle. Since this wick has acted resistance, you'll probably find that it's 0.75 just by looking. So it hasn't even reached up to, it's barely reached up to the 0.75. Let's just observe around. Let's just get this. But what it has done has respected the 0.5. The wicks do the damage, the bodies tell the narrative. You can see that price didn't get above, it didn't close above the 0.5. That's the important level. So my stop loss can go at 0.5 of this. So I don't expect price to trade back up to these levels. Right, so that's the incorrect. So used to trading shorts, longs. So what I would probably do is put that just above it. You don't have to be perfect. And that's a 3.2 hour trade, which is fantastic. But let's just say I missed this move, or I'm not confident in my bias. Let's look to get on side with a continuation. So that was a smart money reversal. Now I need to patiently wait for smart money reversal. And so what I'm looking for is price to trade back into this bearish range, into a fair value gap, or into liquidity. Now we've got a fair value gap that's price to trade it into. We've also got this liquidity here, and let's see what time it is right now. So it's 5 a.m. So this is the London session, right? It's just consolidating. In fact, you could more so call this, expansion. It's consolidated. It's swept the highs. Let's see what else this session does. Yeah, all it's done now is swept this liquidity once and then twice. And then we've had a change in state of delivery, which confirms the smart money continuation. So there's your sweeps. So this was the smart money reversal. This is the smart money continuation. And it's at this point where you can look to get on side by simply entering into the market. That's where your stop loss would go. And with a higher probability that price is going to continue, since we've already had the reversal and now the continuation, you're getting the same risk reward with higher probability. And so let's just see how this plays out for the remainder of the day. Great, so we are trending towards our drawn liquidity. Now, typically what I'll do, the moment I get the smart money reversal, I use a swing high to the first swing low to project my standard deviation, which typically works out to where your drawn liquidity is. So there's a 2.5 standard deviation, which is the typical extension of a distribution side, as well as the accumulation side. Quite frankly, I don't typically use the standard deviation for projecting where price will go to, since I only react from where price does from a higher time frame PDA. That's what I love about trading market maker models, is that once you get your smart money reversal, you have everything you possibly could have on your side. You've got liquidity, you've got inefficiency, which is the two reasons why price moves. You've also traded away from a high time frame PDA. You've swept liquidity, etc., etc. You've got your change in state of delivery. And so once you've taken out sell side, or rather buy side, what's next since price has now changed the state of delivery? Well, sell side liquidity. So let's see how the rest of this plays out. And there's a great example of a protected high and why you should always not move your stop loss. And the reason being is that for beginners traders, and even me sometimes, if price trades all the way down to this level, you're thinking to yourself, "Oh, this is great. So I'm in the clear. Let's move my stop loss to break even." And of course, this is the start of the new day over here. And so price is going to look to trade into the previous day's candle. That would be an obvious target. But since we are in the distribution side of this market maker sell model, it's going to keep that open. that is a protected high. With your stop loss remaining above it, it's going to be safe for most of the time. And there it does, it delivers. So you can see with your power of 3, there's your accumulation, your manipulation, and then your distribution, which then continues on the following day. So that's the market maker sell model on Bitcoin on the 1 hour chart, trading from a daily fair value gap. If you learned anything from this video or want to support, just hit me up with a like, subscribe. Really makes a big difference. See you guys in the next one. Cheers.